Peter Rose, Longwood Currency Trading. Morning. It's early August of 2021. It is a brutally chilly, cold day, and it's raining. I don't know if you can hear it or not. It's very nice to sit out on the porch here and in the country and listen to the rain and think about what are the differences between trading in the Forex market versus trading in real estate. Now, I know most of you, all of you, are currency traders, or you're looking to be currency traders, so you may or may not have any experience in real estate. I think that some of the attraction of involvement in the currency markets is that you don't need a large capital investment in order to start your trading. I think the misnomer is you're going to take that small amount and you're going to run that to tens of thousands of dollars, and I mean, you're just not. Well, I mean, you could over a long period of time, or if you're a really, really good trader and you're trading at 200 to 1 leverage, which is not allowed in most of the major countries of the world, you're going to hit 6 or 10 lucky runs in a row, and you could take a five-figure, $10,000, $12,000 account to six-figure account in 6 or 8 or 10 trades. That doesn't necessarily mean that you know how to trade. If you're talking to people or you're listening to people who have taken small amounts of money and made big amounts of money from them, they don't really know how to trade. They're trading on large leverage, and they got lucky. Because if you're a serious trader and you're constantly going along with things and you're trading at 200 to 1, unless you're really, really good, you're going to take it and you're going to get completely wiped out. The key to that, if you are trading at 200 to 1 and you are fortunate enough to make a large amount of money, pull all that money out of your account, don't trade with it, and trade with a $10,000 account, because you can trade 10 lots, 15 lots with a $10,000 account at 200 to 1, and see if you can do it again. And if you lose everything, you just lose the 10,000. You don't lose the 100,000 or 60,000 or 80,000 that you made when you got lucky. The idea here is the currency markets provide you the opportunity to lose as you're learning without wiping you out. That's not the case in real estate. Not many folks are doing real estate as an investment. You buy your house, or you've bought 2 or 3 houses during the course of your life. You don't know shit from Shinola about real estate. Okay, you know how to buy your home, and sometimes you don't even know how to do that, because a lot of the folks that buy homes don't really understand the rules of the game, and so when they go to sell the house, they're not going to get the money that they want for it. Sometimes a real estate agent, if they're good, is going to tell you what you need to do in order to sell that house. If you're watching the TV shows on that deal with buying a house or renting a house in a foreign country or in the United States or whatever, a lot of those agents will say, this is what you need to do to sell this house. But most of those shows are from the buyer side or the renter's side. They're not from the seller side. So you really don't get the true scoop. And quite frankly, real estate agents, look, I had a broker's license for, I don't know, 40 years or 35 years. I never did real estate as a business. I only wanted to learn what the guy on the other side of the desk knew. I was also involved in real estate finance as a private mortgage lender. And I got my first mortgage license, my first mortgage broker's license, second mortgage broker's license in New Hampshire, second mortgage broker's license in the state of Maine, arranger of credit license, state of Maine. So I know from the finance side, I learned real estate finance, and because I wanted to know what the guy on the other side of the fence knew, and I actually got into the point where I was doing mortgage lending, either working for another company. We weren't doing A-level loans. We were doing loans that were for folks that were in trouble and that needed a bridge to get back on their feet. And so you had to really be able to judge the value of real estate, not just as a home. You buy your home and you get in there and go, oh shit, I really need another bathroom, and so I'll add that on at some point. If you don't know what you're doing when you're loaning money against folks that are in trouble, there's a reason maybe that they got into trouble, and you've got to make sure that all your ducks are lined up and covered, that you understand the value of that property when you loan money against it, and what your loan to value ratio should be in order to be protected in the event that you get caught in a downturn. I knew a couple of guys that had millions of dollars out on the street in mortgages, and they really didn't know what they were doing because it was in a rising market. And geez, everybody can make money in a rising market. But when you end up in a down market in real estate, the whole market just locks up, and you can't get out. And that's what happened with these guys. They were, though they had maybe 70%, even 60% loan to value on the properties, they felt they were pretty safe at having 30 to 40% of buffer. But when your whole portfolio goes down 50% and you're underwater on dozens of properties, and the people can't pay, and you can't sell to foreclose, you're in deep trouble. And so even the folks that know what they're doing can get caught. The advantage that we have in currency trading is that when you understand that you got caught, you can get out at any time of that delusional thing. Well, I'll hold on to it. I'll wait. It'll come back. All that kind of shit. So it goes 30 pips against you, goes 50 pips against you, it'll come back. It goes 100 pips against you, it'll come back. It goes 120 pips against you, I'm out. And it goes 200, 300, 400 pips against you. So at some point you have to say, well, I'm going to get out. You can always do that. In real estate, you can't do that. When you're trading in the currency market, not doing long-term stuff, but day trading or doing short swings over the course of the week, your ability to know what the market is doing is right there on the screen. It's right in front of you. In real estate, that's not the case. And you don't look at the real estate on a monthly basis. If you buy a piece of property, you're going to buy it for 5 years anyway, because you're going to lose. Real estate appreciates at 8% a year, okay? So if you're going to lose of your appreciated value, you're going to lose 20% of that or 25% of that to income taxes. If you hold it short period, if you hold it longer than a year in the United States, you might be 15, 20%, whatever that is. But it's still 15 or 20%. Let's say it's 15%, that's almost 2 years of appreciation that is gone there in taxes. And then you've got 6% on the current value of the house as a real estate commission, and maybe as high as 8% if you're doing commercial. Or if you have a big property, you might get it for 3%. All that stuff. Once you get out of the residential market and the 4-unit and under, which is still considered residential, once you get out of that market, you're in the commercial market, and you can do some negotiating on your commissions that you're paying your broker. Under that, the price is the price, and you're just stuck with that. So again, we've got costs in the currency market. You might have slippage, which you're going to have obviously in real estate, but the slippage is minimal. And then you've got the VIG, your cost of doing business, the spread between the bid and the ask, which can be 1.5 points. You're paying 3/4 of a point on the way in, 3/4 of a point on the way out. Could be a point. You can do exotic pairs where the spread's 8 or 10 pips. And you know, if you're sitting with a pair on a carry trade over the weekend, Jesus, even pound dollar, I've seen that more times than I'd like to admit, go to 14 pip spread on a carry trade over the weekend. So when you go into a you go into a trade on a Friday, and you're going to sit with that, and you pop out on Monday with that 14 pip spread, your order could get triggered, and you'd be way out of the money when the spread goes into 5 pips and then back to 1.5 or 1.25, something like that. You can get strangled with that. If you're doing long trades where your profit target's 100 pips out or 200 pips out, well, that's fine. Then it doesn't matter what that spread is, because the spread doesn't stay that way for very long. And it'll come back to you, and you don't necessarily have to get out when you've got a 14 pip spread just because you happen to hit your profit target over the weekend at that particular time. You know, you can wait a little bit if you've gone and hit a 200 pip profit target. But there are other dangers that are involved in the long-term trading in the currencies. And I think that was one of my problems when I got into the currency markets, coming out of 40 years as a real estate investor, a small real estate investor. The time frame was so long. I mean, I held buildings for 20 years, right? And so you can work your way out of a lot of shit with that. You can get to a point where you say, geez, I'd really like to sell this building. I'd like to get some money and buy another building, but the market is down, and I don't think I can get my price right now. But I'm getting the rents, and they're covering the mortgage and paying me a little bit of income. So I'll wait till next year when the market comes back. And you can do that. In currency trading, that doesn't happen because of the leverage and the volatility that we have in the currency markets. If you think that you're going to be able to wait, you go way underwater on that, and it may not come back within a reasonable amount of time for you to get out of a trade. I took a trade 4 months ago. It was supposed to be a day trade, and then it looked really good. So I thought, well, I'll carry this, and then it went massively against me. I mean, massively. And I didn't get out. I was caught in a institutional pin bar thing, where the thing just took off and raced at me. And I said, well, I'm just going to stay with it. I'm going to make it a long-term trade because I believe in it. And so, you know, 4 months later, I'm still sitting with that long trade, and I've gone 5, 6, 7 R out on the downside. Now, last week, the trade was $7,000 up, and then it went $2,000 up, and it went $1,000 down, and I don't, you know, what it's doing right now. It's back in the black here, but I'm just holding it for a larger gain. It's a little more than I had originally thought that I'm looking for, than I had originally thought, but because of the massive risk that I've taken, you have to compensate that stupidity for maximizing the amount of money that you make because you've held the thing for so long. If you don't, you're ending up making 1% a month or something. That's not why you take the risks of currency trading in order to make 10 or 12% a year. That's not what you do. In real estate, that's what you do, because that's where you maximize that gain. You don't maximize your gain in 2 years, or even possibly even 5 years. You know, in real estate, you're getting depreciation deductions for the property so that you're getting certain tax advantages. Once you get out at the 20-year point where you're not able to take depreciation anymore, which is a static amount every year, or once you use that up at the 20-year point, now you can't write that off of your taxes. So whatever other income is not offset by the depreciation expense on your portfolio. So at about the 20-year point, it's like a good wine. After 20 years, you probably ought to drink it because it's not going to get any better than at the 20-year point. The property will continue to appreciate, but you have lost the depreciation expense deduction that you can take. So that's another factor that's involved in that. All right. I had to move in from outside on the porch because the wind picked up and the rain was just blowing in and I was getting wet. So I came inside. Besides, chilly and damp out there. I guess ultimately, one of the things that I wanted to bring up in this video where I'm contrasting real estate and the Forex market is that the perception of real estate is that it's safe, and the perception of currency trading, particularly day trading, is risky. And look, I've spent 40 years in real estate, and I've been investigating the currency market since 2007. It's 2021 right now. Now, granted, I began my study of the currency markets in 2007, not with the intent to trade, because I was still in real estate at that time. I did it because I'm an engineer. Okay, I got a degree in physics and a 33-year career in software engineering and a lot of math background, a lot of computer programming, doing simulations in all kinds of different markets. And so I started doing currency trading analysis through simulation modeling. And so it was an academic pursuit. It wasn't until around 2012 that I said, well, wait, maybe I should try this currency trading, because at that point I was considering retiring, which I ultimately did in 2015 from my career as a software engineer. And so I'm thinking in 2012, well, maybe I should try this trading thing because I don't want to do real estate again. Once I wind out of the real estate and close my little company, I'm done with that. I'll own my own home, but I don't want to deal with the real estate anymore, for many of the reasons that I've stated in this video. And so the currency trading at that point, after so many years of looking at it and studying it and doing simulation analysis, I said, this is unbelievable. This is the best investment vehicle. It's not an investment vehicle. This is the best trading vehicle to make either cash flow income or to increase your net worth that I've ever seen. Now, the impression all the way through in all of that academic study was that a large major Forex broker did an analysis of 43 million of their client transactions, and that's where this 90-90-90 rule comes into place, or folklore or whatever, that 90% of currency traders lose 90% of their money in 90 days. And so, it's terrible. You never heard anybody losing money in real estate. Well, listen, I spent 40 years in real estate. I saw a lot of people lose a lot of money in real estate. And if you get your timing wrong or you're over levered up, you could not only go broke, but you could go into bankruptcy and end up living in a fucking camper van. Look, I lost $1 million twice in my career, but it was $1 million net worth. I never lost any of my base assets because I was never levered up. I understood the rules of the game. I understood how to play that. I was in it for the long game, not for the short term. I never did a flip before. So I was able to come back each time. But I saw so many people go underwater in real estate. And I don't know what the percentage is in comparison to currency trading, but you take a bunch of folks that are trading $1,000 accounts or $3,000 mini accounts, they blow out of those in 90 days, and then they reload and they blow out of that, and so and then they're done. That's the 90%. So they lose, $3,000 or $10,000, and they're trying. Very few people go to the point where they've lost $40,000 like I did, because of the poor quality education that's out there. I thought these people knew what they were doing. Maybe they do, maybe they don't. It's very hard to tell, but they damn sure can't teach. So, in looking at the 90% statistics, I would say most of that is poor education and people believing what they see in YouTube videos and these courses that these fools put out. In real estate, and just to close that off, so you lose $10,000. I mean, so what? It's in the big picture of things. That's minor. If you screw it up in real estate, look, if you're doing investment real estate and you're buying a 4-unit property in even a small city. I did a lot of my real estate was done in Portsmouth, New Hampshire, which is just a very small but highly affluent area in New Hampshire, and I just sold a 4-unit building a couple of years ago. In fact, my last one went out just exactly almost a year ago in September. For $600,000. So the guy that bought that, he had to put up 20%. And if you're first time in or whatever, you might have had to put up 30. I mean, he put up more than that because he had it. But the minimum to buy that $600,000 property was going to cost somebody 20% of 6. It's $120,000. So you put $120,000 up to get in. And then it'll cost you another $4,000 or $5,000 in closing costs or whatever, $3,000. And then you're going to have to do upgrades and you're going to have to do changes. So he was probably looking at I don't know, $30,000 worth of upgrades. So hey, look, he'll be in it for $150 anyway. And so if he doesn't know how to manage tenants, if he doesn't understand P&L analysis, if he doesn't understand lease and contract negotiations, if he doesn't understand all the shit that goes with real estate, and he's trying to sell that today in this pandemic situation that we're having, where the markets are just, it's really iffy, it's whatever. Could he get the 600 back? Well, I think he probably could. But when these markets react, and he didn't buy it for the short term, so he's not worried. I'm not worried for him. But let's say a year from now, the stock market goes down 30%, and real estate takes another 40% hit. I mean, 40% off of the $600,000 is $240,000. So if you're levered up with your mortgage and it goes underwater, the bank's going to call you and say, "Hey, you got to bring your loan to value up to at least 80%." Well, that might mean $100,000. Well, you've already put $150 into it. Now you got to come up with another $100 just to keep your mortgage, or they're going to call you. No, who's going to finance you if everybody's going south? You see what I'm talking about? So to say that real estate is safe and currency trading is not safe is crazy. The reason not that many people fail in real estate as a percentage to the currency trading is because of the enormously high entry cost to get in. So if you've got a couple $100,000, like to buy my building, you need $150,000, $120,000 to get into that. If you've got that kind of money, the assumption is that you're not a dumbass, that you've done this before, or that you've taken some courses, or you've got a mentor, or something. But you get all these fools that are going to come into currency trading because they can get in there for $200. That's just stupid. Put up $1,000 up and trade one mini lot to learn. Don't be trading micro lots. That's crazy. That's on the other side of the coin. And if anybody trains with me, I won't even work with you if you're going to want to trade micro lots. It's just stupid. I can't even help you. But the point of the matter is that to get involved in the currency markets, you have to study that the same way as if you had to put up $120,000. You may be only putting up $1,000 or $2,000 to get in and learn how to play currencies. Because currencies is something that you really need to do. On real estate, you don't, because the time frame is so much longer. So if you get in there and you don't know what you're doing, even though you supposedly studied stuff and you put $120,000 of your money on the line, you've got time to fix that. Oh, I didn't know tenants were supposed to have leases. Jesus. Oh. Well, get the leases going. Oh, I didn't know that hole in the eave up there meant that the squirrels would get in and eat my electrical cables up there. Well, I've got time to get a carpenter out and fix that and get the exterminator out, make sure the squirrels aren't already in there. So you've got time. The problem with currency trade is you don't have time. So you do a trade entry, and if it goes against you, man, you better get out quick. I don't believe in this give your price room to breathe. If you get in, you better be getting in with the intent and understanding that you know where that price is going to go, or you have a high probability of understanding where that price is going to go. You can't just go, oh, geez, that looks like a good trade. It looks like it's going to give me a 50 pip profit, and I'll take a 50 pip risk, and you go in and you take a 50 pip hit. How many times are you going to be able to do that before you're out of money, before you're down to margin? It's not very many. And so you've got to do some serious study with this stuff, and that's why when I work with somebody, we don't talk about the fact that it's 10 pips or $10. That's a pizza. It's 10 pips, because when you trade with a $100,000 account, that 10 pips is what? It's $100, So the price of tea changes dollar-wise. The percent hasn't changed. The pip value hasn't changed, but the fact that you're going to have a stop loss of a couple of $1,000 because your price is 20 or 30 pips out, you won't be functional. You won't be able to do that. You might get away with trading a little account and farting around with that. Oh, it's only $10. It's only a pizza, and you might just flop your way through and be successful. But you won't be successful if you go and fund that large account, $20,000 or $30,000, where all of a sudden each pip is worth $30. And 10 pips is $300. Man, some fucking people don't make $300 a week, let alone a day. So don't get wrapped up in the fact that real estate is so safe and currency trading is risky. There are risks in both of them. If you don't know what you're doing, you're going to lose your money. Me, looking at this currency market as I came in, I see so many of these educators that are saying, oh, I'm diversifying my assets, I'm going into real estate now, I've made so much money in currency trade, I'm going into real estate now. Why? I mean, if you're successful at something, why wouldn't you be continuing to do that? Why do you need to diversify your assets? You know why you diversify your assets? Because you don't know what the fuck you're doing in the thing that you're doing, and you're afraid. And so you're going to splatter your risk out over multiple financial instruments. Some of them are going to go up and some of them are going to go down. What is that? That's gambling. That's the law of large numbers. That's doing Monte Carlo simulation in real time. That's not being successfully knowing what you're doing. That's just taking the average. If you can learn a skill. When I was doing real estate, I didn't do anything else. I had a career as a software engineer, but I could manage my real estate because it was just a small portfolio. But I wasn't mixing property types and buying gas stations and single-family homes and looking at trailer parks and land and No, it was what I knew how to do. I specialized in it, just like I specialize in just a couple of currency pairs. I didn't try to do everything. I'm not going to try to trade the Bund, the DAX, currencies, gold, oil, the S&P index. Why? If you can't do it on one thing and be really, really good at it, well, you're just diversifying your risk out over a whole bunch of things. You're being distracted. If you really, 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 really know what you're doing, you might be able to get away with trading all that stuff. But if you're watching somebody and trying to learn from somebody that's doing all that, well, is that what you're going to think that you're going to do? Where's the focus on what you need to do? You're interested in trading currencies. You're not interested in trading old tires or real estate. You want to do currencies. So learn how to trade currencies and take the risk mitigation really, really seriously. You know, 10 pips is a lot of money when you're trading a $100,000 account. It's not so much money when you're trading a $1,000 account. But you cannot think about that. You can't think about the money. You have to get disciplined and trade by the pips, and you have to have a rigorous risk control. Because that's the advantage of currencies over real estate. You can get out of currency anytime you want. Oh, I don't like the way things are going, and you're off. You look at a piece of real estate and say, oh man, the government just said we've had 3 months of slowing economy. We're in a recession. The stock market just tanked 300 points, 800 points or something like that. And all of a sudden the real estate is starting to erode. I better get my real estate on the market. Well, it's going to take you 2 weeks to get it listed and get it on the market. By that time, the market's started to slide. Who the fuck is going to buy real estate when you're going into a recession? They're not going to buy it right then, because the smart money knows it's going to go down 20 or 30%, and then they'll buy it. But by that time, you're shit dust. You're gone. There's tremendous advantages of the currency markets over every other financial thing that you can trade. And if you go to my website, longwoodcurrencytrading.com, and go to the currency trading page, there's a list of these 7 things, seven reasons why the currency market is better than these different other financial instruments. It's not an all-encompassing list, but 7 should be enough to have you say, yeah, I've picked the right thing by looking at currencies. Okay, well, don't listen to these people that are going from currencies and buying real estate because they don't know what they're doing. They don't know how to trade. They're afraid, and they're trying to smooth out their risk by moving into different asset level classes. I'd run from somebody like that in a heartbeat. I'm coming from real estate into currencies because I believe in them. Yeah, I'm losing money, but that's okay. That's what you have to do. I know why I've lost the money. The money is because I listened to what these people were telling me. They're wrong. If you're fleeing from currency trading and taking your excess money, whatever that is, and buying a stupid fucking Lamborghini and investing in real estate and gold and all the rest of the crap, you don't know what you're doing. You're afraid of losing your money. I don't want to trade. I don't want to learn how to trade from somebody who's afraid of losing their money. I want to learn from someone, if I'm going to do it, who's balls to the wall and he's 100% committed to that one thing. I don't know how you guys feel about that, but I thought I would put that out as my feelings about the differences between Forex trading and investing in real estate. I hope that it's been helpful for you, and if you have any questions or whatever, please send me an email. Sometimes the comments don't come through, and I'm not going to give you a real detailed response in a comment because I can't do that. So if you do send me an email, tell me a little bit about yourself, your age, where you are, what types of stuff that you've been involved in. So even if it's a simple question, I can address it the right way, because I will address my answers differently if you're 24 years old, as opposed to if you're 54. I say that all the time in these videos because I get these questions and these comments like, you know, what do I do in blah? And then I write them back and I say, well, send me an email. Send me an email or tell me about yourself. Well, I never hear from you again. Well, I guess you didn't really care about what I had to say. So I would have wasted my time and burning my fingers up and writing a big long response in a comment where you don't have any more commitment than that? Don't be flighty as a currency trader, because you will lose your money. If you have a serious question, email me and I'll try to help you. Do the best that I can for you to kind of point you in the right direction. And if you need more help than that, we can talk about whatever that might look like from there. But just be aware that if you're into currency trading because it's the only thing you can afford, and you'd really like to be doing real estate because it's so much safer, don't even bother with currencies. If you're not passionately interested in trading currencies, first of all, don't even start. And second of all, don't call me. Find something that you're passionate about and get good at it. And you'll be a success. Yeah, you may lose a little bit of money, but so what? It's only money. Once you figure out what not to do, as Jesse Livermore said, you'll know exactly what to do. And then you can start making money on a consistent basis. Then you can bump up the size of your account and replace your day job. Sounds simple? It is simple, but it does take a lot of work. And you really should have a mentor, because they're going to just shine the light for you. They're going to point the direction for you so you don't make the same stupid mistakes that, for example, that I did in coming through. And there's some brutal ones. I've written a small book about that, the problems that I've run into. And I don't have any books that are published or courses that are published or whatever. I just enjoy writing, and it's more for myself. And it's like a diary for me, that type of thing. But there's I made a lot of mistakes for sure that I should not have made with the experience that I had in real estate. But I believe the people that were teaching me. You know, when I was learning real estate, I went to school. I got a salesman's license. I got a broker's license. It cost me a lot of money to get a broker's license. It cost me a lot of time. I had to take a comprehensive exam, not only for the general real estate knowledge, but also for the state of New Hampshire information. When I was doing mortgage brokerage stuff, I had to take a test for that. I mean, come on. This stuff is, but that information is valid. It's out there because the people that are writing that stuff actually have put their money on the line and are fully pot committed to the real estate market. So you can trust what they're telling you. Seminar's book, Questions on Real Estate, the classic thing. You don't know anything about real estate? Buy that book. Then you'll know how complicated that is. But boy, I've certainly lost a lot of faith in the folks out there doing YouTube videos and selling courses and stuff, telling you what a trend line is and all that shit. It's not going to help you be a successful currency trader. It really isn't. So hopefully my videos, which I think this is the 125th video that I've done, something like that, around that. So I'm having a good time doing the videos, and I hope you have benefited from it. And if at any time, like I said, if you have some questions, you need something answered, send me an email, and I'd be happy to chat with you through the email and see if I can help you out. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.